the conversation that Ben and Hank Paulson and Guyton and I had was a very forceful conversation on what they wanted Morgan Stanley to do, which, as he remembers, I was not going to do that.
And what did they want you to do?
They want us to sell the firm for $2 a share.
And to sell it to?
J.P. Morgan.
Yeah, and
in all fairness, it was Tim who wanted that. I don't know where.
Yeah, I wasn't on that conversation.
It was Tim. With all fairness.
And was Jamie Dimon interested? Would he have bought it at that?
He was not interested, and he said, all I would pay you is $2 a share.
Yeah.
And we had 3 or 4 conversations that Tim kept saying, call Jamie, and that Jamie didn't want to do it, and I didn't want to do it. But when the head of the New York Fed is pushing you to make those calls, you make the calls.
So after the fact, when we look at the last few years and the problems banks have faced since these acquisitions, is it fair? Because when we look and say, well, it was the Fed who pushed the banks into these trades, one would say.
No, that's not fair. You're talking about to get us in this position? No, the street, look, when you just make money and the market's going your way and you can borrow low, sell high, you can securitize, and people are making 20, 30% in ROEs with their stock, someone's got to blow the whistle. It got carried away. And leverage was wild. I mean, when you think about the leverage these firms had, including Morgan Stanley, it was absurd. But when everything's going up, everyone wants to play. And I remember calling Tim on a leveraged loan deal that we were trying to make. We were uncomfortable with it. We kept passing, and finally our guy said, look, we have to be involved. We've passed on the last 3 deals. We get involved at, let's say, 6 times leverage, which is ridiculous. And then once the sponsor had the leverage, they turned it again to 7 times leverage. We dropped out. I called the head of the New York Fed and said, we're out of control. So I can say no to 1, 2, maybe 3 deals. On the 4th deal, I have to play.
So you knew Morgan Stanley was over-leveraged, and the banks were over-leveraged. Did you know that the
Only a
banks
fool would have not known that we were all over-leveraged.
But the Fed must have seen that. Did the Fed
Well, it was
see
becoming
that?
increasingly obvious, as we got into the crisis. But part of it was happening was that with the fear and the panic, people were dumping securities, as quickly as possible. That was driving down the prices, and that was making the situation a lot worse.
Yep.
Oh.
Okay, but today, when you look at what corporate America is doing, we are seeing corporations borrow trillions of dollars to buy back stock. We're seeing M&A at record levels. Is that helping the economy? Are we really?
It can help. It can help.
It can?
Sure, of course it can. First of all, the
How does
buybacks.
this level of buybacks help?
Buybacks put money in the economy. It gives the shareholders money. The M&A, if it's good M&A, is going to, if it's good M&A, it'll improve efficiency and rationalize markets.
And you think that's what we have right now?
In some cases, I don't know, but that's not.
Where is leverage today compared to where it was in 2007?
It's not anywhere close to
that was my sense.
It's not even close.
There's been a huge deleveraging,
corporations.
Right? There has been, but also you got to remember the regulators now are much more proactive, and not just with the CFO or the CEO, with boards. Regulators are coming into board meetings and talking about risk, talking about leverage. That didn't happen 8 years ago, 7 years ago.
Yeah,
it's happening now.
This is a fascinating thing that I had not realized, that we actually have representatives of the Fed who are sitting in board meetings in banks now.
Well, more than that, you actually have representatives of the Fed sitting in the building. I'm going to guess Morgan Stanley has 150 to 200 people there.
Who live there?
All the bank, yeah, absolutely.
And you're not concerned, as we're seeing, like in the leverage loan market, for example, Covenant Light coming back in the universe. Like, this makes me feel a little bit anxious when you look at high yield and distress.
Sure.
Again, unsophisticated investors being pushed into those markets. What happens when rates normalize?
Well, look, I think, again, you need to look at their balance sheet. And the balance sheets today are conservative. They could handle that kind of stress right now.
The banks can?
Yes.
But can investors? You've got insurance companies now being pushed, because of where rates are, into riskier assets. What happens when we have this rate hike? It's not going to be banks holding the bag. It could be investors.
Well, investors have to, the Fed is not in charge of making sure investors make money. And the Fed is in charge of making sure that financial stability is preserved. So the Fed is looking at all these financial conditions and trying to think about what could happen, what are the risks. And the concern the Fed has is not that somebody loses money. The concern the Fed has is that because of leverage or other reasons, the loss of money leads to instability in the system, and that's the concern.
But those investors, for example, are insurance companies. Those are state pensions
they have
who are being
regulators
pushed.
too. They have regulators too.
And given where rates are, they have been pushed into further and further riskier assets. And while banks can't take on risk anymore, the high yield market has frozen. It makes me very concerned for those investors. We're just moving where the risk is sitting.
I think you're overly concerned. I really do. And I don't know what the time frame on this discussion is. I want to say something very clearly. I've said it to Hank, I've said it to Ben, but I want to say it on air. The two heroes is this gentleman and Hank Paulson. Their leadership, and look, I didn't agree with them, and I was really upset with them when they were trying to break my arm to sell the firm. That's all right. We got through it. They did their job. We did our job. But their leadership, that's what saved us.